Hello everyone, I would like to welcome you to the first video of the Crypto Wave YouTube channel. My name is Jolly V and I will be your host. Let me start by introducing myself. This is my Twitter account, my Twitter page. As you can see, this is my name, Jolly Voyager. We have some affiliate shit here. I joined in October 2017 and that's when my crypto journey started. It was almost at the peak of the previous bull run. But I only started buying on November, so it was even later during the bull run that I started buying. And worst of all, or best of all, right now I can say surely best of all, I started trading. Right now I can say that surely was a bad thing at the time, but as you know, time brings experience and I'm still in the market. So it was a good learning experience, and that is that I started trading with leverage as soon as I entered the market, as I know that a lot of you are doing it right now. There is a lot of new people coming to the market. Lots of them, like the majority of them, are trading with leverage, and by now they should have all been wrecked. They should have all gotten wrecked because we had as you know, we had the massive dump, more than 50%. Since Elon, that little fucktard, started dumping it on us and all of the FUD together, so I guess there is no new leverage traders. But we'll get to that on another video or later on. I don't know. As I was telling you, I entered the market on November 2017. I can say that I entered the market with $80, got out with 1,000. So I made 1,500 and got out with 1,000. So it was not bad. It was a good learning experience. From then on, you know, bear market was full on upon us. So almost all of the trades that I did, I got wrecked. And so I started learning. I started learning how to trade. I started studying some patterns. I started watching the moon back then. You know, Carl from the Moon. That's when he started his channel. It was one of the few channels that we had that we could watch something. Right now his channel has grown a lot. In these 3 years it's been crazy. The dude used to talk about stock market. Now he doesn't anymore. Yeah, so I started watching videos. I started watching YouTube channels. So I watched some channels, I read some books online, I developed my trading strategy, and I started investing in crypto, starting trading, and also started buying and hodling a bit here and then. But it was the bear market, and it was the greatest learning experience I could ever have. So if you start trading and you start accumulating in a bear market, that's one of the best experiences that you can have, because it will get you prepared to the bull market and to what we are experiencing now, which is, in my opinion, some kind of a mid-term bear market inside of a bigger bull market. Because right now I think that we surely aren't done. We could be close to it, but this is a big but. I think that this is only to scare the newcomers, all of the new leverage traders, and in my humble opinion, I really think that we are still on full-on bull market until the end of this year, maybe start of the next year, and that this is just a temporary bear market that needed to happen because we've been pumping like crazy for months. We hadn't even touched the 21 EMA, weekly EMA, during all of that pumpage. So yeah, we needed this cool off, and it's good because this cool off brings accumulation period, and I think that this is the appropriate time to start this YouTube channel and document my journey. Let's see how this goes. Let's see if you like the content. So I went fully on crypto at 420, April 2020, last year. Since then I had to develop my strategy, my trading strategy, to be able to be profitable and try to avoid some big losses. Not to say that I haven't taken some big losses, sometimes they do come your way, and this last dump was a huge loss to everyone that wasn't shorting, everyone that was caught on the wrong side, even those with low leverage. If they didn't close their positions, they got wrecked, because even low leverage, as low as 2x, got wrecked. With that being said, I still had to develop my trading strategy to be able to minimize those risks, to minimize those losses. And there is some guys, some OGs that I vow that I put my hands on the fire for them. If it wasn't for them, I wouldn't be able to do this. I wouldn't be able to be a full-time trader, and I wouldn't be able to develop this strategy and to keep on generating profit and avoiding losses and doing what I love, basically. Basically, guys, thank you for the great tools that you provide and for the ability that those tools provide to the people using them. I'm deeply, deeply grateful for the things that you put out and these tools, because if it wasn't for these tools, I couldn't be as good as a trader as I think I am. Because I'm not the best trader of all, but I can surely do some TA and I can surely do some trades, and I was doing them before, and since I got your tools, guys, they have totally changed my trading style and my trading account. So I'm really, really thankful for these guys and for the opportunities that you guys bring. So these are the OGs. Tyler D. Coates, also known as Socrates, he developed EMASAR. Let me show you what EMASAR is. So here we are looking at the Bitcoin chart at the 15 minute on Bitfinex. And this right here, this is EMASAR. EMASAR, it's a kind of a combination of EMAs with parabolic SARs. And I'm not going to spend a huge amount of time explaining how it works. I'm just gonna give you the basic rundown of it. Because if you want to get into details, you can check out Socrates' channel, and surely he talks about it a lot. And you can check the videos that he has there, and also Honest Analysts. This is pretty straightforward. You see here we have a lot of bands. We have 1, 2, 3, 4 bands, counting the red one. And then you see here that the bands flip. So these bands indicate the trend. When they flip, the trend changes. We have the bands disposed like this. We have a bull trend. And on here, on the right side, we have the bands flipped. So we have a bear trend. That's the start of it. So now let's analyze each band, because each of it has its own name. Socrates developed a name for each of these bands. So this one right here, it's the beach, and it's under the 200 EMA. As you can see, it acts as support, usually acts as support. Below the beach, we have the ocean. The ocean, usually, it's a double down place. Like we have here the buoy, and the buoy, it's a double down place. Last salvation point of the trend. If the price comes to the buoy and doesn't jump, doesn't do this, we get this. We get a trend flip and we enter a bear trend. So the buoy, it's the last resort for bull trends, and it's usually a double down place, but it's a risky place also to double down, because if it breaks down to the downside, and here this was a little bit risky because it broke down to the downside, but it didn't touch the underworld. This is the underworld. The red band represents the underworld, and this is where trends go to die. So as you see, here we have entered the underworld, and the bull trend died here. Then it started the bear trend. So you have to be really careful when longing, well, or when doubling down, or when longing the ocean or the buoy, because there is a risk that the trend will die. Well, not here, but that the trend will go to the underworld and die. So as you can see here, we pumped, we went all the way up from the ocean, from the bottom of the ocean to the buoy, to the beach. We crossed the 50 EMA, this right here, the green one, it's the 50 EMA. We went right up to the sky. This one here, this band here, it's called the sky. And right now, as you can see here, it was a clear blue sky. And when the sky gets cloudy, it means that it's going to rain. And usually it rains down, it doesn't rain up. It only rains up when the trend is bear. When it's a bear trend and the sky is cloudy, it usually rains to the upside. But here we have a bull trend, and we touch the sky, keep on touching it. And here we breached and we reached for the moon. These little dots here are the moons, and when we are mooning, we are going alongside these dots and turning the sky darker. because each time we are mooning, we are breaking through resistance in the sky, so the sky gets darker. We have more resistance above us. As you can see, the sky got from clear skies to a little bit of gray skies. It can get way more darker, but since the market is in a fragile state, this was more than enough to make it rain. So this was more than enough to make it rain, and it rained all the way in the beach, it rained to the ocean, took us to the underworld, and we flipped trends. And as you can see right now, we were in a bear trend, because the rain took us all the way to the underworld, and the bands flipped. So when you see the ocean above the beach, and the sky below the beach, it means that we are in a bear trend. And see, we touched the sky, then we went all the way to the beach, and now the bands act as resistance. We went all the way to the beach, and the beach, which was support before, now acts as resistance. So when we are in the beach in a bear trend, it is usually a good place to go short or to sell. And if we touch the ocean and the buoy, it's usually a good place to double down, depending on which part of the trend we touched it. Because as you can see here, we touched the beach, we went all the way to the sky, keep on touching the beach again, and we went all the way to the sky. Like, see, we started mooning to the downside, and here we are mooning to the downside, and we reached this point of support. We formed some kind of inverse head and shoulders here, with a shoulder, a head, and a shoulder, and then we pumped up. See, this is today's movement. When we are pumping, we got out of this triangle, we were in some kind of symmetrical triangle or in a bear pennant, and we broke down, so I consider this a busted symmetrical triangle. And since we got all the way up inside the triangle again, I think that the next movements will probably be to the upside, because busted patterns have way more strength in them when they get busted. So this is like a typical move by the whales or by the market makers to scare you out of it and to think that, okay, we are going down, and we sure as hell were. But see, here they picked it up, and we are right back inside the triangle. So I think that the most likely move would be some kind of retest of the EMAs and then more upside movement. So this is EMASAR, and if there is something that you think that I haven't covered or that you didn't understand, please write in the comments, and I will do my best to explain it in the next video. Now let's go to the next indicator, the next OG. Man, this guy is a fucking idol. Don't want to be sucking your dick too much, but you're a fucking rock star, man. Mad dude, you're a fucking rock star. Yes, you are. So the next OG, the next indicator that I use to day trade, swing trade, trade everything, is crypto phase. I love your indicator, and the indicator is called Market Cipher, and this shit in combination with EMASAR has brought me like the best results ever. The best trades ever that I took was with the combination of these two indicators, and the third one that I will cover as soon as I cover Market Cipher. So, what is Market Cipher? You can check it in the description. I will put a link there. You can check what it is. Let's get on to the next one. I'm joking. But yeah, I will put a link in the description so you can go to the website and check every detail for yourself, but I will do my best to try and explain it here. So Market Cipher is like a combination of different amount of indicators and oscillators, and there's Market Cipher A, B, Market Cipher DBSI, I think that's how it's spelled. Yeah, Market Cipher DBSI, and then you have Market Cipher Support and Resistance. Like the one that I use the most is Market Cipher A and Market Cipher B. DBSI has come out, and sometimes I give it a check. I'm still grasping how to use it good, and for now, for explaining purposes, I will only use Market Cipher A and Market Cipher B. Market Cipher A, as you can see, puts out these little things, these little signals above the price, above the candles, and I use Icon-Ashi candles with Market Cipher, and with EMASAR, with everything I use Icon-Ashi candles over the regular candles. unless you are trading like the cocaine time frames. If you are trading the cocaine time frames, you should change to regular candles, as they give you a more accurate price look. See, this is way more fucking accurate, and my PC is a toaster, so I won't keep on changing that too much. I was telling you about Market Cipher A. We have these little things, signs here above the candles. Each and every one of these single signs means a different thing. So the yellow X usually means manipulation, and there is a strategy that when you see 4 yellow X's, you get ready to long. You get ready to start looking for a bottom and start longing because the manipulation is about to end. But this is the 15 minutes. Only use that strategy on higher time frames because it will be way more accurate. CryptoFace has a video about that you can check. The blue triangles means that usually the trend is changing. They are not quite accurate at the lower time frames, so use them at the bigger time frames. They usually mean that the trend is changing. Then we have red diamonds and red X's. They mean that the price goes down. Mainly, they mean that the price goes down. The green dots confirm a trend change, confirm like a bull trend. And usually the yellow diamonds mean continuation of a trend. But I usually don't look too much at these ones. The only ones that I look are mainly yellow X's and big blood diamonds, like it's like a red diamond like this one, but bigger one. Let me see if I can find one. You see right here, there was a blood diamond and the red X, so this is a no long zone. Price will go down. If you go long here, you will get wrecked. Don't go long here. So these are the ones that I look for when I'm looking at Market Cipher A. Also, I also look at this EMA ribbon. This is like some EMA or MA ribbon. I usually look when it's contracted or diluted. It works like a kind of an elastic. You see here it contracts and then price pumps. Contracts and then price pumps. And the yellow one is the one that I look for also, for price to get above or below. So that is Market Cipher A. Let's talk about Market Cipher B. This is Market Cipher B. A lot of noise. Yeah, a lot of noise, guys and girls. I know, a lot of noise. But it's just how it is. Sometimes you gotta be noisy. But you can also filter out these things. If you click here, you can check them all out and filter out the ones that you want. So, what are we looking at here? Let me take some of these ones out. I'll take the blue waves, the little blue waves. And I'll also take the RSIs and the stochastic. This way it's easier to look at. So with all of the dots taken out, this is Market Cipher. And for me, this is one of the most important things to look at with Market Cipher, which is the money flow. You see money flow right here, it's red, and here it's going into the green, here it's going into the red, big red right here, and now it's starting to go into the green. Once again, finally. So, with this one you can check money flow, see if it's entering the market when it's green or exiting the market when it's red. And you see that it usually moves in waves. Look, see? This shit moves like a wave, and you just catch those waves. You catch those fucking waves. And alongside with the money flow, I also look at the VWAP, which is this yellow line. This is some kind of adjusted VWAP that CryptoFace and Flopping Groper did. This is not the regular VWAP, but it works really good with the money flow. You can kind of check what the money flow will do. You see the VWAP is going down, so the money flow probably will go down. And that's how you see the VWAP. This is the VWAP. And we have these lines here, the red lines and the green lines. The red lines mean overbought. So when we get here, we are overbought. And when we get here, we are oversold. You see, the money flow touched the first line, almost touched the second. And then it started moving up. So it meant that we were oversold. And it was time for money to start entering the market. And see, right now we are moving up to the overbought territory. We are slowly moving up there. So, I usually look at this one to see the RSI and the stochastic. And let's toggle some more things up in Market Cipher. Let's toggle the blue wave and the little blue wave, the buy signal, blue wave crossing up signal, and the blue wave crossing down signal. So these blue waves are momentum waves, and what we want to do with these ones is look for divergences, divergence in the price. We want to look for a place where the money flow has kind of hit an apex, kind of hitting the max for one side or for the other, and then we want to look at divergences. And what we want to look for with these momentum waves is for some kind of big blue wave and then a smaller one. And since we are at the 15-minute, we should have them more apart from each other. And right here we have a classic example of a really nice place. You see we have a big wave here, and then a smaller one, and then another smaller one, and another smaller one. So right here we have big wave, even smaller wave. Money flow is starting to curve up, starting to enter the market again. It entered the market here, we have the first pump here, so you could have taken this one right here, and you see it's exactly aligned with EMASAR touching the sky and then shooting up to the beach, and money entering the market. Money exited the market a little bit again, created another wave, and then we pumped up again. See? This is how I use EMASAR in combination with Market Cipher B to find good places to go long or go short. And this has been like rocket ship. Rocket ship fuel. This is awesome, guys. Matter of fact, this is not for financial advisory or none of that shit. I'm just a guy on the interweb documenting my journey, my trading journey. So take everything that I say with a grain of salt and always do your own diligence. Like, do your own thinking, be responsible for your money. I'm not a financial advisor, and this is only for entertainment purposes, guys. So, with that being said, this is how Market Cipher B works. I've taken out all of the stochastic and all of the RSI because we don't need that shit. We only need this. We only need money flow and momentum waves and VWAP and EMASAR. This is what we need to be able to bang some good shit. 52 million market cap, really small project.